All right, welcome back for another edition of The Final Mile, where we answer your questions that you guys send in. Please continue to do that. You can send them in right through our website, or we've been getting a lot of them right from our YouTube comments. That works as well. We got a lot of them today from there. You can go email us, info@freight360.net. I got to apologize for my nasally sound today. I'm battling a cold, but that's all good. So, Ben, ready to get into it?
That I am.
All
Let's
right.
jump right into it.
Sweet. Our first question is, what kind of insurance do you carry as a broker for things like claims? So we only have a couple minutes to answer this. So I definitely want to refer, if you guys ever have questions about insurance, go right to our website, freight360.net. And we have a lot of full length content, podcast episodes on insurance, as well as some special guests that we've interviewed to talk through policies. And we've done some short form videos as well. But the only required insurance that you've got to have is your surety bond. So it's a bond. It is an insurance product, but that is the required policy that you need to have to get your license as a freight brokerage. Now, most brokers will carry a general liability policy, which will cover things like slips, trips, and falls on site, like at your office. And a lot of times, customers will require that general liability policy as well as part of their contract. And you'll also see other things like a contingent cargo policy. Now, this question specifically asks about claims. Keep in mind, if there's a cargo claim or an accident, the motor carrier that hauled that load, that's who's primarily going to be the party that needs to be insured, since they've got possession of the freight and are the one controlling the truck that either had damage to the product or gotten an accident, whatever the case might be. But refer to a good insurance broker or agent when you're looking at insurance products. And again, your customer is going to kind of dictate primarily what you'll need to get, what you're going to have yourself. Anything you want to add in there? I know we've talked about load share policies as well and other content, but any other policies you could think of that stick out to you?
No, the thing I want to point out is because this is the thing that comes up the most often and is worth us repeating. Brokers, insurance policies do not get stacked on top of, do not work in replace of. They are something completely different than the carrier's cargo insurance. So when it relates to cargo claims, right, your brokerage insurance really should rarely, if ever, come into play. So everybody out there that is listening to this, and we've had clients that we've worked with that came back to us months later and weren't clear on this. Our job as a freight broker is to ask the shipper, what are their insurance requirements? It is our job to make sure primarily that the trucking company we hire has the insurance requirements to meet the shipper's documents, whatever they're asking for,
Yep,
right? Because
exactly.
we aren't physically moving it, we are driving it, we don't have the trucks. It's our job, full stop, to hire a company on behalf of a shipper doing the exact same things they would do. So I don't want anybody to be confused and go, well, we have $100,000 in contingent and the carrier has 100 in cargo. So that means we have 200 together. That's not the way any of it works, right?
No.
Whatever your carrier has in cargo insurance, make sure that number is bigger than whatever the value of the load is. It's
Yep.
pretty simple. If you keep it at that, and then to your point, talk to an insurance agent or insurance broker about contingent in general. If your shipper is asking you for it, they're good things to have, but I wouldn't jump to getting them unless a shipper is requiring them for the same reason, right? That's
Yep.
why the federal government doesn't require a freight brokerage to have insurance. It is for this
Yeah.
very reason.
We're the middleman. We're the intermediary.
Correct.
It's not
Yep.
our goods. We don't ever take physical possession. The last thing I'll add in as a caveat is you do have the ability in some rare cases, you'll see this happen, where the freight brokerage will do something like an all risk policy through a company like LoadShare or through their local insurance broker, which puts them in the first position of coverage. So again, it's not stacking on top, like you said, Ben, but you can purchase that policy on a one load basis to be the primary policy. And sometimes we'll see that if a motor carrier doesn't have sufficient dollar amount of coverage or has an exclusion to a certain commodity, we as brokers can purchase that policy, but it's not our policy. It's insuring the customer's goods. We're just the one that's actually we're just the ones actually setting the policy up for them as the beneficiary.
One last point, and it's just because I was literally doing this right before recording today, but like if you are working to prospect these very large companies and you see dollar signs, you're like, well, they're really big, they move so much load, there's so much money if we can get onboarded. I want to point this out because it is also very common for very large companies to require, in my opinion, like ridiculous amounts of insurance that don't actually cover anything
Right.
just to keep the number of brokers and carriers down. To be honest, I think this is one of the main reasons they do it. And I'll give you a few examples. Like this is the one we were reviewing today. There is a requirement for a brokerage, right, for us to have $1 million in workman's comp. We have 500 grand, and that makes little to no sense since nobody in our entire company will ever be at any of their facilities. Workman's comp would cover a slip and fall there. We don't have drivers. This is an example where you would see that for a trucking company, but it makes no sense to require it as a freight broker because we're not going to be there, right? And a couple other ones where an excess policy of $5 million as an
Yep.
umbrella, an E&O for $1 million, and auto liability for $5 million. And again, we have like 2 million in auto, mostly as
Well,
just
you
a
probably have contingent
catch-all.
auto is probably what it
Right.
is, right?
It's
Yeah.
exactly. It's just phrased different. It's phrased as auto
Yeah,
liability contingent,
we
but
saw one
yes.
recently of
Yep.
$10 million in an umbrella liability policy. So yeah, there's some wild requests out there. And what's funny is the majority of the time those policies they can't tell you why they need them, but you're right,
No.
it does weed out a lot of the players that can't afford to pay for those policies.
And I'll bet, again, is a long shot, knowing who this company is, and it's a name that everyone would kind of recognize, is they've seen lawsuits from trucking companies and things get rolled in because of an accident and things we've talked about. One of the 4 or 5 mega cases going on in the country right now. These are related to those things. So the larger companies come up with crazy requests or requirements for their vendors without really thinking through how this affects even the transportation department. So
Yeah,
anyway, we're not going to do a whole episode on it, but it was worth pointing
right.
out just because we're
No,
just looking
it's
at
good
that.
discussion. We get that question a lot, so I'm glad we broke it down. All right, next up, how would you explain effectively quoting lanes to a new broker using things such as mileage and rate per mile? Um, well, I want to distinguish one thing real quick, right? When you're in the spot market, which is where we typically operate as freight brokers, a going rate is whatever a truck is willing to take a load for right now. That is a going
Yep.
rate. Now, to answer the question, if you're trying to price out a lane based off of you want to look at how, the mileage on it and the rate per mile, it's a simple equation of rate per mile times miles
Times
driven,
mileage.
right? So like to give you a super broad example, 500 miles times $2 per mile would be a $1,000 total all-in price. Now, what you have to consider though is if you're using a product like DAT's Rate View and you're going to see what that median average is historically, or maybe even rate cast to project it out, and then you get that upper and lower threshold, which give you your 25th and 75th percentiles of those rates in their data set. Um, you have to remember 50% of the data does not it does not seen on that screen. So you have things like the time of day, backhaul for a carrier, holidays, how far they have to deadhead from wherever they're currently going to be unloaded empty. Those all play in as well. So you can get a rough idea by doing a rate per mile times the mileage. But keep in mind, there's a lot of other variables that will factor into whatever that rate is. And whatever a driver tells you and agrees to on the phone, that's going to supersede any data set that's out there.
Yep.
So
And again, another way to just think about this is right. Like if you're trying to book a truck out of like on a lane that has high volume, like LA to Chicago, there are going to be so many trucks there and so many options. Typically, on a normal load, that you'll pay real close to the average. If
yeah,
you are trying to quote a lane that is Henderson, Nevada to the middle of nowhere, Alabama, just to pick up 2 random places, right? Like there might only be 6 trucks that meet your requirement that are empty all day in that city that can even make your pickup, right? So even if the average rate is 225 a mile, if 4 of those trucks have no desire to go to the southeast because of the day of the week and only one can and is willing to, you're paying whatever that person is going to run it for. You
yeah,
can say, hey, this is where the average is, this is where I would like to be. But if your load has to pick up that day and they're literally the only available carrier in that market that can meet those, you pay what they're willing to move it for. That's it.
Yeah.
I mean, that's
Or
what it comes
or
down to.
or even like it's pretty much the same thing, but or you got to pay somebody to deadhead from 250 miles
Right.
away. In which case,
Exactly.
it's going to wash out the
Same
same
rate.
way. So, all
Exactly.
right, next up, I kind of laughed when I saw this one. This is from our Facebook group. It says, I kind of paraphrased it. I'm a new broker and I feel uneasy about beginning this journey. I see a lot from carriers and brokers about the true horrors in this industry. Should I save myself the headache? So she was basically like double guessing. Like she just got into the industry. What would you give me your take on it, and then I'll give mine. What would you tell someone that's brand new and just seeing all this animosity between brokers and carriers, all the horror stories about, double brokering, loads held hostage, brokers screwing carriers on rates? What would you tell somebody to kind of either ease their mind or just give them a reality check?
Yeah, I mean, I just think it has more to do with your expectations. Because I think in any market where you want to go and establish yourself, I mean, you're going to go build a business. That's what this is. You're going to be a new broker. What you're saying is, I'm going to open a business in this industry. What do you think? I think for anybody starting a new business, you got a 98% failure rate of any business, I think, across every business that has ever opened in the United States, from software as a service to an ice cream company. So, like, the odds are always stacked against you. And if you want to build something that's going to bring you above average income, no matter what industry it is, and you want to own that business and you're going to build it yourself, expect that to be a steep hill to climb. Do not expect to be able to go create your own business in an industry that you're just learning about and then to make twice the national average income in your first 8 months or a year doing it. I think no matter what industry you are considering, that is unrealistic. Now, if you come into and go, hey, I think I really enjoy this industry. I've done my research. I think it's a good fit. I like doing these things. I'm a people person. I've done, worked a little bit or here or there. And you're like, hey, I know it'll take me a year or two, but I'm willing to put the time in and grind it out and build something of value. I encourage you to do it, right? But that's where people differ. I think it's more at the starting line than once they're into it. The people that think it's going to be easy, they were never going to do this anyway, whether it was this or anything else, to be honest, right?
Yep.
Like, if you're jumping into a new business because your current job is too hard and you just want something easier, then do not do that no matter what business it is. If
Yeah,
you're okay with the work.
I want to add into like consider the context of this question. So she's asking it in a Facebook group of freight brokers and carriers that oftentimes will just complain about each other. So
Correct.
you're going to a place full of oftentimes more negativity than other places, and that's just the kind of the reality of social media. Is you're going to get a lot of
For
keyboard
sure.
warriors, right? You had a great point about expectations, right? I would say, um, understand that things can go wrong and you can put measures in place to prevent yourself from, being the victim of a fraudulent double brokerage situation or a load held hostage. Consume a lot of our content. We try to lay it all out for you, but that's what I would say about it is consider the
There's like,
source.
and I'm like, the last like question is really what made me kind of chuckle because it was like, should I save myself the headache? And I'm thinking, I don't think you can build any business without daily headaches. I'm like, and it's mostly headaches. And
Yeah.
I was like, there was two quotes that remind me of. One was this one guy says, he's like, I think building any business is like being in a 24/7 knife fight. Just all day, problems are hitting you in the face and you got to solve them and be creative. The other one is like business owners are the types of people that would rather work 80 hours for themselves than 40 hours for a boss, right? And that's the personality trait of the people that do these things. Like, they are hard, but that's why they're worth it. And that's why so few people do succeed. But when you do, it's really, really worth it, right?
Yep. 100%. Good stuff. Our next question is about surety bonds. How much do you pay monthly for a surety bond? Well, we can't necessarily give you an answer to the monthly cost because you might not pay monthly. You might pay biannually. You might pay a certain amount up front and then monthly. That all depends. What you can expect. We can kind of run you through averages and a range on an annual basis because that's the majority of the data we can get from either people that have responded to this question or just reported data. A surety bond is a product that you're required to have, like we mentioned earlier, that is you have to have at least $75,000 in the bond, or the alternative is to have a $75,000 freight broker trust fund, which would serve the same purpose. Though the reason you have to have it is to ensure payment to motor carriers in the event that you default on payment to them. Right. So if you were to just not pay a carrier because you don't want to, or like a disputed whatever, like a disputed charge or rate decrease or something. But also if you got behind on your payments to your carriers and your cash flow, or you went out of business, that bond is there to ensure that your carriers are made whole. So your personal credit rating and your company's credit rating is often what is tied to the premium on it, just like any other insurance product, right? If you're prone to getting in car accidents more often, your car insurance premium is going to be higher than someone like myself who works from home and doesn't drive very much. So I will tell you, we've seen a range from, and there's probably going to be outliers still, but like 1,500 a year to like 5,000 a year. And I know that's a pretty wide range, but it just really all depends on a whole lot of factors. If you have very poor credit or very little established credit, you're likely going to pay on the higher end. Whereas if you have a well established history of making payments to people, you're going to likely be on the lower end of that. And different underwriters are going to be looking for different things. So I would recommend shop around when you get any kind of product like that. Have you gotten any data that conflicts with what I just rattled off there?
No, I mean, anecdotally, I hear anywhere from 2,500 to like 7,500 in the past year from random people. And again, different parts of the country, different credit, everything that you kind of pointed out.
Well, yeah, you're looking at like a few $100 a month, basically, is kind of
Yep.
what that would average out to, depending on your worthiness. So, all right, last up, and this kind of ties into the question earlier. I'm interested in becoming a freight broker agent. How much am I able to make in the first month? So this is like kind of like the expectations and the headaches and all that stuff. Um, if you are, yeah, if you are brand new with no experience, you could likely expect to
Expect
make
to learn
zero. Yeah. Same
a
thing with
lot.
if you're starting a brokerage from scratch. It
Yes.
takes time to build up a pipeline of shippers and prospective customers and then convert them and then be able to actually receive payments from them to realize profits from a load. Now the exception to this question would be, like, I work for Pierce Worldwide Logistics. We have freight agents that work for our company, or they're contractors, technically 1099. If they come to us from a previous brokerage role, they can make money like week one, right? Because a lot of agents will get paid upon invoice from a load versus upon collection of customer payment. So if you've got a book of business and you just say, hey, I want to leave running my own brokerage or leave being a W-2 and I want to go become an agent for a company. Yes, if you've got that portable book of business, you could potentially make whatever your book of business is worth in that first month. But if you're starting from scratch, like I assume this question or this listener is asking, zero is what I would say is your expectation. I won't even like go down the rabbit hole of what you can possibly make down the road because it just depends. It's so variable. There's limitless income in this industry. I've seen agents that do millions of dollars a year, and then I see agents that do 30,000 a year. Depends on how much business they're putting through. There's not like a restriction on it. So
I think one of the hardest things to go in our country from somebody that works in a job in a W 2 setting to being able to work in solely commission, right? Is what we're talking about. If you're a freight agent, right, you are working 100% commission. To make that transition from going to a job and getting a paycheck to being able to kill what you eat, right? I think really only a few things need to happen. Like you either made enough money and saved enough that you've got at least a year's worth of expenses that you can go and make that jump and do that reasonably. I think is one way I've seen people do it successfully. The second way is work multiple jobs and work 12, 14 hours a day, part-time in some job with enough savings that they can go and prospect until they get enough customers that then they can make it.
yeah,
The third way, which I think is the most prudent or makes the most sense, is go and work for another agent covering loads, go and work in the industry, get at least some income while you're learning it, prospect whenever you can and do as much of that as possible, because now if you get one or two customers while you're making 2 or 3 grand or 4 grand a month working for another agent, that one customer might be enough to allow you to start working a little bit more on your own. And then if you can get two or three over the course of 6 months or 8 months, you might be able to transition from an employee into having some of your own customers in a way that you're not like literally gambling with your entire life of not being able to
Right.
pay the bills. And to me, that's the thing that again, going back to the earlier question, when I used to work at a bank as a small business lender, we used to meet with everybody from like, I want to open a restaurant to a landscaping company to whatever, right? It's the same premise for every business all the time. How much cash do you have? And in every scenario, when we'd sit down with somebody, they're like, well, I'm going to quit my job and then I'm going to go open this restaurant. And we're like, well, you only qualify for the loan because of your job. If you quit your job and nobody comes into the restaurant, the bank doesn't get paid back. So,
Yeah.
like, everybody kind of runs into this problem. You've got to have at least enough runway. So, I don't think you should jump into a commission only thing without at least some savings or the ability to work within the industry to get some income.
Yep. Very true. Set those expectations, man. That's what it comes down to here. So, well, great questions. Great final mile little bit here. We appreciate you guys. Keep sending them in, and we'll see you guys on the next edition of the final mile. Ben,
Whether you believe you can or believe you can't, you're right.
and until next time, go Bills.